thoughts on, we got in the PPI, we got in retail sales. The market is really, after 2 weeks of gains and a little bit of a run up, which felt good, for at least for a while. Now what?
You know what, the market likes good news. And, when the bad economic data came out, I think everyone thought that the Feds were going to go ahead and kind of pivot a little bit. But when James Bullard said, you know what, our target is still 2%, we really need to get to that 5% range, the market kind of panicked and they started to pull back and sell off. And so I think really what's going to happen is the Feds really aren't going to start to pivot until we really do start to see more economic downward pressure.
Right, understood. And what's interesting is this sort of telltale about the markets, because the conversations I'm having with people is, okay, things are supposed to feel better by the second half of the year. But this sort of back and forth that in the near term, they're worried that we could be approaching recession, or maybe the Fed will pause. And if the Fed pauses, that's not necessarily a good thing. It means that maybe we're slowing down too much, or that we'll have a recession later in the year. And if the Fed keeps rising, well, then the market doesn't like rising rates. So it's sort of like you can't win if you're an equities shareholder.
Well, you're absolutely right, Nicole. You wind up being a victim of your own success. And I think the biggest problem that the Feds have right now is that they continue to kick the can down the road. And now they're faced with that target of 2%. So they have to maintain that. But once they hit 5%, if the economy starts to break, I truly believe that, they may stop raising rates and even, go to a situation where they start quantitative easing again, just to kind of release some of that downward pressure on the economy and alleviate some of the pressure on the markets.
Right. So at this point now, what's an investor to do? Because what do you think is going to happen? How much more will the Fed do?
That is a really, really good question. And I think we're going to have to wait until February. But, for us, we're still looking at, those things that people need. We still really like energy, consumer staples, those types of healthcare things that people need right now. But, I'm not bullish. I'm still of the camp where, we need to be cautiously optimistic, and, we're still looking for good buys and have a large position in cash.
Okay, so at this point now, we look at what's going on around the globe. The Bank of Japan took a pass today. They unchanged. We saw actually Asian stocks, European stocks giving it a go. We saw UK inflation print come in a little bit softer, so inflation coming down a little bit. What's the global story?
I think we're gonna see a global recession. It's going to impact everybody, especially as the value of the U.S. dollar continues to decline. I think yesterday it closed a little bit above 102. That's going to impact, our economy as well as other economies as well. If interest rates continue to go up, we're putting more and more debt on our credit cards. We almost hit the 2019 all-time record for credit card debt. We're just $2 billion shy. So, I think that is going to impact what's going on, all around the world. And, probably what unnerves me more than anything right now is, inflation is all about cash flow, and the money supply, and we continue to extend credit. And so at what point is that bubble going to reach maximum capacity where people can no longer borrow and make, buy anything? So that's when we get to that point, I think we're going to see that trickle down effect, not just in the economy, but in the markets.
Right, understood. We were just showing the dollar, but I saw in your notes you were talking about volatility, and you expect a lot of volatility to continue.
Yes.
One trade that people always like to do is just playing the VIX. I mean, when you see the VIX go below 20, you could buy it and then you could sell it on the way up. Do you think that's a decent trade?
It is speculative, and whatever, before doing anything, everyone always needs to check with their financial advisor. But there's so much volatility back and forth. You really need to understand that play and the impact that's going to have going forward on.
Yeah. What about the dollar? I mean, what do you think about the fact how it's come down? And there's really a lot of calls that it'll probably be below 100 soon after having peaked well over 110, 114, 115, something like that.
Yeah, well, you know what? It actually hit 115 one day and closed at, I think 114 spot 10. And for it to be at 102, we believe, and we talked about this in December, that, we see it being below 100. And that's going to have huge impact on the cost of goods coming in. So as because we don't produce anything here. So as we continue to import, those costs are going to get more and more expensive, and it's going to raise the cost of living of everyone.
And so at this point now, when you look at what the Fed is doing, what's the back half of the year look like? Because you have the rate hikes, but you also have what they're doing with the balance sheet. Tell me one more time, what do you think happens in February, in March, and what they've been doing with the balance sheet?
That's a great question. I think from a credibility standpoint, they can't stop raising rates. I mean, they said that their target is 2%. Like I said before, James Bullard, thinks that where we're at, it's a good start, but they're not ready to stop raising rates so far. But if the economy crashes, we could have another round of quantitative easing. And if that happens, that'll probably kind of pick up the market and the economy towards the end of the year. But I think a lot lays on the back of the Feds and what they do, and that's going to impact what happens between now and the end of the year.
Understood. Ed Siddell, EGSI Financial. Thank you, Ed.
Thanks, Nicole.